Hey guys. The 5900 pin continues. Yep. Something like that. It's a bit of resistance of 5905. Although not a ton of it. Ooh. New high for the day. Might get some profit taking here. Bot calls at 10, 15, 25 coming in. Looks like we shook most of the puts. There's some sold puts at 10 too. 2750 is the upside test for ES. Hmm. Interesting. So if bulls capitulate and take profit here, this would mark probably the end of the distribution. Then maybe we get a breakdown at 5,900 ES. Ooh, interesting. Picking up a little ball on the downside move. Not quite a rejection yet, but if we lose 5,905, it is. Oh. Out of the money call starting to sell off 59, 20, 30. Still bought calls at 25, 15, 10, and 905. Little tiny head and shoulders. Almost. Test of 10, same like puts. Dangerous. Could be a good put entry, but I don't know. I feel like I'd rather confirm the downside with all the bullish positioning near spot. Make sure there's some capitulation or profit, at least profit taking. So far, not a lot. And still bought calls at 905. MQ's kind of failing the 44 test, but not yet. Still no test on VWAP up there. Fucking choppy. YouTube censors everything. I think JPO saves Farmville puts. JPO speaking at like an hour, right? We'll probably stay fairly stable until then. Or at least hold 59, 5,900, 5,890. Do have a little bit of a breakdown starting. Mm. Caught some support just under 59.05. A little bounce on ES, high volume or higher volume. This might reverse here. This is incredibly boring. You're not wrong. Still bought calls and sold puts to the upside out to 15. So bulls are still trying to turn this around. It's interesting. Hmm. Failed bounce? Not yet. 267. Hmm. Yeah, the at the money bull is still pushing back against the like sell off in the 59, 20, 25, 30, 40 calls that took profits on the gamma spike. Yeah, NQ still kind of looks like shit, but also not fully rejected yet. So it could just be bullish consolidation. NQ's still not breached the high of the day, whereas ES has. And I would imagine NQ pushing for like 21,480 would be fairly equivalent to ES trying to push out to 59,2750. Is an income fund a good place to park a 401 during a market downturn? I mean, generally you'd expect bonds to be where performance would be in the event of a significant downturn or a long-term one. Although there's issues with the treasury market right now. Most income funds are, like dividend based like S&P stocks, so like higher yield dividend stocks, so they tend to take a hit in a market downturn. Well, not as much as other equities, because most of those companies are a lot more stable in their pricing. They don't trade at really high multiples, so it's a little more insulated. But it also depends on the type of income fund. If it's like bond based or something like that, that's probably a lot safer. Like bulls are trying to get one more good rally out of this. NQ consolidation starting to break up a little bit, but not out yet. The fuck do I keep getting over? 1 second. Holy fuck. Yeah, it's nice to get up from my desk and then come back and nothing's changed, but it also sucks. Still a shitload of bot calls at 10 and 15. I don't I don't really think the bulls have given up yet. I will say above 15, it doesn't look like there's much. Mostly just shit on the sold call side. And probably not enough momentum or interest to squeeze them out. Is there anything I missed this morning? This fucking lawyer called me at like 9 a.m. Could not get off the fucking phone. Ooh, ISM was shitty. New orders were a little bit better. Prices moderated a bit. I don't know if that's bullish, but helps, I guess. To get a lower high here. A little bit of support. Hmm. For what? Corporate shit. Tiny hedging shoulders here. Hmm. The overall trend is still a bit bullish. There's a breakout above trend on ES here. Almost. Very close. Yeah, still bot calls at 10-15. 15-17 seems like it would be a good test before a bigger failure. I thought 10 would be the top, but just too many bot calls came in. Am I being too quiet? Do you prefer trading SPX, SPY, or other, and why? I generally prefer to trade SPX. The reason being is that it is a very liquid options chain. There's not as much slippage as you find on the ETFs, and it better tracks futures and the actual values of the underlying than QQQ or SPY or IWM, which tend to have some arbitrage due to the readjustment of their NAV. Also, big leverage. Yeah, no problem, man. Audio's fine. Okay, that's good enough for me. I wish bulls would just push the upside test and capitulate on their calls so I could buy a put. This is fucking boring. At least like NQ 21,458. I like ES too, but I mean, it's not like my primary trading instrument. Because the majority of what I do is selling, sell side. And I mean, SPX is a lot better for that than ES. It's almost no concentrated effort to continue selling puts here, which is annoying. But there's some gamma to the upside. I think getting above 10 is really important for the bulls. Maybe they could push it further if they did. I don't know. Vol's kind of flat between 10 and 15. It's very little change. 21 to 21.3, but like 20 is 23.8. Ah, fuck. Well, there's a test of the downside trend. You guys can hear. I don't really have it charted on here, but you can see the consolidation on ES pretty clearly. Which is failing a bit. Some bot puts came in 905, 58.95. Uh, Left a gap at 901.79. Retesting the consolidation here. Uh, More bot calls coming in. One sec. Yeah, we got to bounce. Gaps filled. Mm. No, there's still bot puts here at spot, like 905. So it looks like we got snagged on a little bit there. Breaking back up into the trend again. Some of the bot puts at 905 are closing out. Sold puts at 10, 5,900, 58.90. Oh, breakout to the upside. There it goes. What's up, Gilg? How you doing, man? A boil up 15%? Hmm. Do you have a plan to add NDX to real-time data? We could. It sucks, though. I touched futures, and they touched me back. I know that feeling. Ooh. Head and shoulders. I feel like I don't like the capitulation of the 59.10s right there. But still calls being bought to the upside. 10, 15, 20. Plenty at 59.05. Sold calls out at 25.30. Quite a lot of them. Jesus Christ. Because we broke out to the upside. We broke above the consolidation. Do you see the trend? Hold on. That's not even working. 1 second. Why isn't that fucking display one? That's as close as I'm gonna get it. I guess it's more like this. You see it? Okay. It's kind of a shit breakout, if I'm gonna be completely honest. And I got rugged once already, but bulls are still kind of piling in on it, so they might be able to just leverage it up enough that they push out above the resistance at 10. It's just hard. There's a lot of resistance here. And it doesn't seem like there's a lot of people that give a shit, but give that much of a shit about breaking it. Which is weird, because they could really pressure some of the sold calls if they actually tried a little harder. Oh, failed. I'm gonna kill that son of a bitch. There was a fly in my room and he was bothering the shit out of me. No, fucking J-Paw doesn't do shit about flies. He just like sits on his ass in the middle of the floor and like makes like weird clicking sounds at them. And then he'll jump like a couple times and whiff, and then he just lays down and keeps making weird sounds on the floor. I didn't name my cat J-Paw. He called him J-Paws. My cat doesn't have a name. Loaf? Yeah, pretty much. Clicking sounds? Are you sure it's a cat? I think so. He like opens his mouth halfway and it's like like that. Yeah, like chittering. And then he just gives up. It's like he gets really horny and he's like and then he's like, I don't want to deal with it right now. It's not echolocation. He's just a moron. You're projecting. Really cool if this actually failed. Hey, look at that. Uh, Some bot puts came in at 58.85. Still a lot of fucking bot calls to the upside. Tiny little head and shoulders here. Sort of. Gap left behind us at 59.03. JPOW in 15. I wish you'd fucking start talking already so this market would move. Positioning still weighted pretty heavily to the upside. Gap filled on the downside. Dude, 905 back in the money. That's a good breakout. Left a gap at 59.07 behind us. There we go. God, it fucking took long enough. Still some bot calls out at 20. Bot calls in the money at 9.05, 59.10. Sold calls above 20. Maybe we pull back before the speech and fill that 59.07 gap. It's like right here. Still have like 4 minutes before he starts talking. Palantir puts got cooked. Why did you short it? Didn't we have this discussion last week? Thought we did. You've seen the inverse head and shoulders on SPX too? The big one? Yeah. Easier to see on ES. But it's also just really sloppy on ES. This is the, like the lower near term trend on ES at like 59.20. Because if you look here. That's why it's so hard for us to break up. We just keep testing this and getting rejected. Still want that gap to fill. Pretty sure if we lose 59.10, we're gonna fill the gap. But not filling it would be at least short-term bullish. I'm not sure that filling it's very bearish either, but maybe a little. Okay, nice. Once you bailed yourself out.
To the 75th anniversary conference of the International Finance Division of the Federal Reserve.
That was the creepiest fucking hi I've ever heard.
It is a great pleasure to see so many familiar faces and friends. 3/4 of a century ago, the IF division was born out of the recognition that in the post-war era, the U.S. was going to be at the center of the economic and financial markets and currency of the economic world. Given this, understanding the international forces that affect the United States was becoming vital to meeting the Federal Reserve's domestic mandate of maximum employment and stable prices. To have a deep understanding of these international forces, trade, the current account and financial accounts, foreign inflation and growth, commodity prices, the dollar, was not going to be easy. The division was going to need to attract exceptional talent, to conduct exceptional analysis, and to develop exceptional tools. And it needed to be able to deploy all these assets to support the FOMC in understanding and responding to cyclical and structural developments, as well as international crises. This conference is a recognition of that achievement. Today and tomorrow, we will celebrate the exceptional accomplishments of the IF division. We will celebrate the dedicated staff who have contributed to the rich and inspiring environment, some of whom have stayed their entire careers here, becoming leaders at the board, and others who have become leaders in academics, in business, and in policy institutions around the globe and within our own system. Through the academic portion of the conference, we will celebrate the vital importance of research on topics such as international finance, international open economy macroeconomics, and international trade. This research and the intellectual rigor it brings to the analysis and the model building of the IF division is critical to achieving the division's and the Fed's mandate. We will also celebrate the sense of mission and collegiality and friendship of the staff throughout the decades that make it
at least we have a lot of range
together today. There is no better person to kick off this conference than Chair
maybe in August when people come back.
From the start of his tenure at the Federal Reserve Board, has been a supporter of the International Finance Division. The chair has long recognized the pivotal role of the U.S. economy, financial markets, and the U.S. Central Bank around the world. He is a remarkable and respected leader among his peers across the globe. Please join me in welcoming him to the podium to open what is sure to be a wonderful next 2 days. Thank you.
Thank you, and thank you, Beth Ann. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also a trusted and generous mentor and a teacher to a generation of the most important economic thinkers, including many heads of global central banks, advisors to presidents, and countless economists. And I know all of us who knew him will miss him. So, congratulations to the Division of International Finance, IF in these parts, on 75 years of outstanding work in service to the Federal Reserve Board and by extension to all Americans. Many current staff members are here to celebrate today, as well as a significant number of IF alumni, including past division directors Ted Truman, Karen Johnson, Nathan Sheets, and Steve Kamen. The division has also produced many other notable alums, including, not least, Chair and Secretary Janet Yellen, Professor, author, chess grandmaster, and our keynote speaker, Ken Rogoff, and humanitarian and economist Albert Hirschman, famous for the Herfindahl-Hirschman Index, and more recently, perhaps a little less famous, as a character in Netflix series Transatlantic, to name just a few. We keep close track of these things. In my time at the Fed, the IF division has provided invaluable insight into global economic activity, international trade and capital flows, and developments in foreign financial markets. Division staff have also played a key role during episodes of global financial stress. And your research and analysis are critical inputs into our monetary policy decisions. Thank you to all that have served in this division over the past 75 years. Today, I'll kick off this conference by briefly reviewing why the division was created in the first place and highlighting a few of its many accomplishments over the years before turning you over to a robust set of presentations and panels. So, the IF division was created on July 1, 1950, but the idea began to germinate a few years earlier. The U.S. had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic. IF helps produce the data on international capital flows and has spent decades researching the effects of these flows and international trade on U.S. and foreign economies. Understanding this complex and interconnected web is essential for us to anticipate the path of employment and inflation. Another important development in the 1970s was the increasing use of macroeconomic modeling, which greatly influenced the division's work. Under the direction of former division director Ralph Bryant, IF developed its first multi-country model. Always on the forefront over the years, economists in the division, many of whom are in this room today, developed increasingly sophisticated models, with each new generation expanding the capability to tackle the international risks and issues of that day. These models have proven useful for understanding how international shocks transmit through the economy and financial markets, for assessing risks and uncertainties through alternative scenarios, and for better comprehending the
Starting to get some
implications
sold
of various
puts at
shocks
20.
for the U.S. and the global economy. The
Still
results have
bought calls
informed
at
research
15.
papers, board memos and briefings, as well as the risks and
25 or
uncertainty
30
assessment
test
that
isn't out of the
FOMC
question.
committee participants receive in advance of every meeting.
Although still not a lot of
The
interest up
IF
there.
division has also played an important role in responding to global economic turbulence. A prime example is the Latin American debt crisis of the 1980s. That episode required analytical thinking about the macroeconomic repercussions of the crisis as it played out around the world. Work by the division and by the IMF and other institutions led to the establishment of emergency facilities to prevent more dire financial outcomes. As global capital flows increased, other episodes of financial distress surfaced across the world, including in Mexico, Asia, and Russia. International capital flows and spillovers became and remain a recurrent feature in the division's analytical and monitoring work. The expertise generated through study and response to these global challenges proved invaluable when stress hit closer to home during the global financial crisis and then the pandemic. Both of those events required immediate, broad, and in many cases unprecedented responses to avoid disrupting the availability of credit to American households and businesses. The nation and the world looked to the Fed to lead in these moments. During the global financial crisis, when global funding markets came under stress, IF worked to establish swap line arrangements with several major central banks that helped restore stability in US dollar funding markets. And of course, during the pandemic, IF division helped lead efforts to expand the provision of dollar liquidity by setting up the FEMA repo facility. These periods of acute financial stress and uncertainty prompted the division to develop new tools and analytical products that could be used to understand and respond to the events unfolding on the ground. For instance, the division has devised new methods to measure and assess the effects of various types of uncertainty on economic activity, including new indexes that were built to track geopolitical risk, inflation, trade policy, and economic uncertainty. As we continue to navigate the current period of heightened uncertainty, this work is critical to understanding the quantitative implications of uncertainty shocks, certainly relevant today. So I'll conclude by saying that for 75 years, 9 Fed chairs and countless board members have greatly benefited from the guidance and counsel of IF staff, and not just when responding to crisis.
Still 50 cents short
this team
of
helps to assure that we're well prepared for our international engagements
test
by providing us detailed, some might say extremely detailed materials ahead of time, and often by traveling with us. IF staff are always welcome and productive companions in these and other endeavors. We benefit from the robust relationships that you establish and maintain with our global counterparts. So thank you to Beth Ann and to all the staff here that organized this wonderful event. And finally, thank you again to all the current and former IF staff for what you have done and continue to do to help us be a globally knowledgeable and responsive central bank.
So the 5915 calls are taking profit here.
Americans. Thank you very much.
We get more resistance to the upside. I really don't think things can get much higher than 30 today. That was exciting. Zero commentary on monetary policy. Yeah, I think that might be. All the bot calls are in the money here. Wow. Except the 15s, but those have been falling off. But the 10 and the 5s are. I think the lack of monetary policy commentary will probably lead to the bulls taking some profits, because I don't think it opens up any upside moves. And Goolsby is not being particularly dovish right now. That was the 15-minute, yeah. Sometimes it's important to go look at the longer time frames. Don't get so hung up on the 1 minute. Let's see if we get profit taking and fill that like 5907 gap, because it's still sitting there. And then maybe reassess after that. Yeah, shorted at 59.25 twice. Hmm. Bull trap. Hmm. Still hanging on to 59.10. Gaps down here. Oh, wait, no, gaps here. Hmm. No, I didn't say anything important. Twenty, 30, or over 5%. Yep. Well, he was bullish on Netflix. I don't know if I'd call that bullish on Netflix, but alright. Netflix was brought up in the speech. Really interesting to see if this fails. Ooh, lower low? Not yet. Close. As you can see, that 10 support's pretty important. Filling the gap and keeping a lid on vol is going to be hard. Hmm. Pretty far above VWAP on ES and NQ. Gap's still not filled. Few bot puts at 59.10 coming in. Still a lot of bot calls right here. So, lots of stability. If they slip out of the money, though, it can move down as far as like 58.09 or 58. I'm sorry, 58.90. Oh, 9, 90. 58.90. Well, we already got the 15 test, which I shorted, although I'm not making a lot of money on doing that. I don't think they're trying to get 20, to be honest. There's not a lot of positioning up there. Loss of 10 here, maybe? Nope, not yet. Weaker bounce, though. Vol moves up really fast on a downside move. So if bears just lever up here, they could probably push down through the collar, maybe even 5,900. Well, either bears lever up or bulls pull back short puts. That's the effect would be the same. You can just go buy Bitcoin. Why the fuck would you buy GME to own Bitcoin? Yeah, the collar's at 59.05. Starting to slip 10 again. Ooh, new low. Oh, so close to the gap fill. So people are aware, GME's current correlation with Bitcoin is 5.4%. I'm not short GME anymore. I only shorted the opening high that one morning. I got stopped out of that. It was like 30, 35 or whatever it was, 34. I didn't say I was long Bitcoin. I just said I'm not short Bitcoin. Or GME. See what I did there? No, the BTC correlation for GME is hot garbage. Just if you want to trade Bitcoin. Stop getting support, you fucking bitch. God damn, motherfucker, that's so annoying. I'm just gonna short it again. Fine. Let's play this game. I'll have you know I just made $100. Dork. Oh, there it is, locked in. Noob. The 5905 calls are closing. And someone's selling calls at 1520. There's still a few sold puts to the upside, but not like a fuck ton of them. Just a few. Very, very few. 5890, 5880. Huh. God, this is stinky. Can we get a drop to Gamma Flip? That'd be cool. I'd really enjoy that, I think. Huh. God, just let it go. Any chance for dumpster? Yields are burn Khalifa. Yeah, yields at the top end are up. 10 years still under 4.5 though. It's not that bad. ISM wasn't great. The put order was off by a penny. It's okay. You'll probably have 5,000 more chances to buy in at the same price. When market death? I don't think the market's going down super hard anytime soon. Things are a little bearish right now, but just a little. Probably wouldn't drop at any point in the near term more than like 3 or 2.8 to 4.1%. Just a little bit of range. It's not like a crash or anything. Enjoy the 50 bips of downside. Don't tease me. At this point, I'd enjoy like $3 of downside. Hmm. This fucking blows. Is there some other event coming up? Why the fuck are positions not moving at all? Recent PCE inflation print might have been the last vestige of pre-tariff impact. 28 counterparties, 135 billion at reverse repo. Levitt says EU came to the table thanks to Trump, and we're optimistic of a deal with the EU on trade. Seems like the market doesn't give a flying fuck. Trump and China's President Xi will likely talk this week. Levitt ends remarks to reporters. Stanley kicks off $5 billion debt sale for Musk's X.AI. Gork did say big guys on the sidelines. Yeah, they are. They're not positioned for anything exciting, that's for sure. SPX isn't in any kind of squeeze. We're sitting at relatively flat gamma. It's fluctuating slightly positive to negative exposure, but it's fairly dog shit. How did these puts get out? I'd imagine you bought them, probably somewhere near the bottom. Statistically, somewhere near the bottom. I definitely did. Farmville blew up his Roth. Farmville. That's okay. He's going to his Gamblers Anonymous meeting later, so he'll be fine. Ooh, nice. Well done, Bluth. So you listened to what I said last night. I'm glad someone did. Maybe I should start doing Pickles picks in audio form because 46% of people are illiterate. Really open up my audience, you know? Now you're learning. I bought calls too, just at the top. I didn't buy puts at the bottom today, and that's progress. It's not bad. You know, it's actually fine to buy calls at the top and puts at the bottom as long as you put a stop on them. Like you can play breakouts and breakdowns and price action. You just don't hold it when the position fully fucking reverses. Thinking, no, it's okay, I'll still get there. Why won't you just sell out already? I don't think anybody wants to buy me. Tiny chainsaws? That's true. I do get offers for things like that still. And I am trying to get WeBull and Moo Moo into a bidding war. Thanks, Balani. Caffeine's not working. What do? Become a pigeon whale again and do cocaine. You remember that money you gave to actual homeless people? You could have bought cocaine with that. Or crack, like a bunch of crack. What if we're too dumb to identify obvious signs the position's reversed? You mean you expect us to read the room and also not be regarded? No, I mean, just set a fucking reasonable stop on the position so you don't blow up. I know this is controversial, but you should probably not own options contracts that are down more than 30%. Unless you have some kind of hedge. I did buy several more ghosts, but now my heart feels funny. What do? Again, the answer is pigeon whale. I don't know what you want out of me. Did you pick 30% because Farmville said his were down 30% earlier? No, I didn't even see that he said that. Complete coinkadink. I mean, bulls are slowly netting off their at the money positioning just because it's getting consistently pressured, which could lead to a bigger breakdown if we ever fill this fucking gap. I'd like a lower low here. How about just don't come in and buy the bottom? Anybody think of doing that as a strategy? Oh, why? Mm, NQ is like starting to slip 21,440, which is actually kind of an important support. Maybe NQ will lead the way. There's two things I distinctly don't like about this downside move. One, the massive pile of calls at spot. And two, we didn't test the actual upside resistance on NQ or ES. Like, we came just short of testing resistance. Which means there's probably a bunch of bulls trapped to the upside who still want to get out. And that's why they're fighting so hard against the pullback. This is egregious. I'll buy your bottom. Thanks, man. Wait, ports are allowed to have contracts that aren't down 30%? Is there a special toggle you have to flip to allow this? If you suck at entries and exits, just set your stops tighter. If you're good at them, you can set them looser. It's not that difficult, right? It's just you guys are really good at staying negative in your accounts. It's just do the opposite of that. Normally I would buy puts here. Instead I'll buy calls. Jesus Christ. We still haven't filled this fucking gap. Gaps filled. Oh, fuck yeah, Mike. That's awesome, dude. I'm glad to hear it. That's fucking sick. I don't work at BlackRock, CMO. NQ had support on the 5-minute. Well, I guess NQ at the EMA 30 on the 5-minute. We're still way above VWAP. There's no fucking volume being traded up here at all. Like, I think ES VWAP is down at like 5902. NQ is down at like 21,327. VIX is pushing up against like 19 a little bit again. But so far, no like capitulation. 5905 puts bought. 5900 puts sold. Ooh, nice. Mm. Yeah, NQ's been like kind of riding the 30 all morning. It's almost just slipped it here, which I feel like is somewhat significant. If it fails. The last bounce off of it was pretty fucking weak, so. Oh, there's a little volume. If we get the 10 back in the money, I don't know, 15 is pretty big resistance. Might be able to test 15 again. Gamma Strike does not have a ping. Although we can probably add one. But we're working on notifications a little later. We're more worried about infrastructure and stuff right now. We do want to add notifications though. That's something we're gonna be doing in the future. So people will be able to set price level notifications and stuff and add favorite tickers, that kind of shit. No downside gap on this push up. Still a lot of bot puts at 59.05 though. I wonder if those would capitulate on a breakout at 59.12. NQ's getting some more support. Maybe this is where we get that push for the upside test at the actual resistance. I'd like to see him fight a little harder for it. Yeah, ES came like 50 cents short of the resistance test. And NQ like a few points short. Or at least where I have resistance marked. Hmm. Oh. There you go. Hmm. 15 cents matter that much on a low volume day. Might matter more. You're gonna ban me if I bought all those sold calls from you? What sold calls? Bulls have a little bit of a breakout here. Got some buyers instead of failing the right shoulder, so. Very little upside interest. Still a lot of bot puts coming in. This might fail here. Okay, so I was right about that. Fun. So 59.05 puts closed, but so do the calls. Hmm. There's a little spike in vol there, though. Need those kind of moves to shake out the short puts. Otherwise, they're just going to keep compounding their positions. There's a lot more bot puts at 15 now. Bunch came in on that failure. Left a gap at 59.10. The bot puts pile in once again. Okay. So bears don't want this higher. Bulls do. Hmm. There's the 59.27.50 test. And NQ got its upside test. 59.15 calls taking profits finally. But some bot calls out at 25 coming in. Bot puts at 20. Looks like the long puts closed on the move up. The puts at 15. So I think this is where futures buyers net out. Right here under 20. Didn't make much more on that compared to the previous eye. It got sold off pretty quick. The spreads collapsed right away. Like I said, the bulls aren't really buying a lot out of the money. At least not yet. There's a lot of sold calls to the upside here. Twenty test. 21, 22. Five 30. I don't think we're getting much higher than 30. Even 25 is going to be tough. Hmm. I finalized the divorce paperwork with my employer. Oh shit. I'm almost an eligible work bachelor. Did you download LinkedIn? Professional Tinder? Can you tell Farmville to quit trading? He's gambling away his gains. That's what he said he was gonna do. He said he was gonna go put it in something safe and not be an idiot. The best GS can offer Nuke is a hat with no expected arrival date and unlimited requests for improvements. It's fairly accurate, actually. Doing a little bit of a squeezy. Was there news on this? Or was this just all on its own? Oh. A US nuclear deal allows Iran to enrich uranium. Crude tanks. Some trade deal shit. That's not news. No, that's literally been Iran's stance the entire time. We're not going to stop enriching uranium. We don't care what the US says. And now we've made a deal with them that they don't have to stop enriching uranium. Art of the deal. I'm tempted to buy a put here, but I kind of want to test at 30. Somebody bought some 20 and 15 puts. Sold puts moved up to 59.10, 5,900. So sold put support now at 5,900 instead of 58.90. Well, both, but more sold puts at 5,900. WeBull moved up a little bit there. Volume on the news. Some bot calls out at 35. I think those are just short calls closing though. 25.20. Mhm. Another retested the high, maybe? Hmm. Mm. Those bot puts at 20 aren't printing. And there's bot calls at 35. Hmm. Hmm. Bullish or bearish? Choppy. Still netting. I still don't think we get above 30. But there's still some pot calls here. Hmm. Alright, so bot puts at 20. Bot calls at 25 here. Sold puts now moving up to 59.15. Not too much of a change. Ooh, head and shoulders. A little bit. Still think it needs like a other ups. Well, maybe it doesn't, but it probably does. Upside test. There's still short puts coming in. Does it really want this W? Yeah. Right now, support at 10 and 15 on the sold put side. Hey, nice. It's a head and shoulders. Sold puts. It's an assumption, but I find it's a pretty good one. There's some in the money profit taking on the calls, but not the puts. I feel like the 30 calls getting sold. No. It's weird. Yeah, I mean the 30 call's been sold, but it's fairly flat. Not not a lot going on there. There's a lot of bot calls at 35. So maybe somebody pushing this, like the 30-35 spread. Closing price on SPX today? That's a good question. I don't know. I would say somewhere between 10 and 30 right now. It's very early. More likely 15 or 20. There's a little bit of capitulation with a gap. If we fill that gap. There's still a gap back down at 59.10 also from the start of this rally. Alright, the gap we left to the upside got filled in. I'm not sure that's bullish though, filling it right away like that. Almost within the same candle. Yeah, see on ES, the right shoulder is still a little lower than the high of the left. Vol shorting's flattening out a lot here. There's no gains in Vana to the upside anymore. Really no gains in Gamma either. Doesn't mean we can't just get stuck here, but very hard to move up much higher. Charm's slightly positive. But if we lost like 5,900, it would go negative again. And it falls off really quickly on any downside move, especially under like 20 and 15. Becomes way less supportive. I feel like 20 is a great closing price. 20 or 15. What's this? 10.05. Somewhere between 20 and 10. Hmm. I think Q's still overperforming a bit. A little uptick in vol, some short puts closing out. Volatility is still skewed to the downside pretty sharply here. Seems like there's plenty of demand at the 59.20. .30 test. Uh, huh. Still bought calls at 35. Not really selling any puts out there though. Some of the 35 bought calls closing on this upside move. Yeah, getting higher than 30 is pretty hard. Hmm. Okay. No, I don't think we get back to 5,900. Not that we couldn't, it would just be excessive. Especially with how low volume is. We could get back to 10, I think. I think that's reasonable. But first there needs to be some call side capitulation, of which there hasn't been any yet. Yeah. No more, not much more delta to the upside. 20 will be supportive, so will 10 on any downside move. Volatility's moving up a tiny bit. Hmm. Um, yeah, I saw the trade deal news. Thank you, Nisi. What do you call making a demand to other nations to provide a best offer bullish? He's probably trying to race the court decision and lock in trade deals before his tariffs get cut off and all the other countries tell him to go fuck himself. For sure, but it reeks of desperation. Yeah, it's very obvious. Doesn't matter if no trade deals are reached and there's no tariffs implemented, the market's going to want to rally. I don't think they really care about the political positioning. No, but you did today, Baradactyl. Thank you so much. Weekly pits? I mean, I have more data this week. I'm very interested in services, especially services prices. Positioning for tomorrow? I can look. Out into the end of the week. There's some sold puts at 25 and 50, but shitload of sold calls up here. That don't seem like they want to get squeezed out. Um, Not a lot of bot calls or bot puts on the chain anywhere, though. I guess a few bot puts at like 30, 35, 40, but very few. Most of those came in just now. Big sold put support down at 5,900 and 5,850. A 59.10 sold put position for the intraday is pretty large. That's into the end of the week. This is a great spot for bulls to net. So if we're gonna see bulls close anything substantial, this would probably be the place where they do it. Because they're not going to get any more support from the MM higher than this. So you probably start to see some short puts close around here, but probably the ones further out of the money. Maybe some bot puts coming in spot. There's a few coming in. Calls are taking profits. Hmm. Finally, some red. Yeah, a little. Not enough. Need to lose 20. Just a fairly big pullback from here. We did slip the uptrend on ES though, so that might keep failing. Seen some 40 calls. I really hope that doesn't fuck me. How do you think we could drop to 5,800 end of week? Did data change the scenario? No. I don't think we've gotten any data that's that important. I think gamma falls off into the end of the week, and volatility is still skewed to the downside. I mean, regardless of our move up today, this is where I predicted we would close around like 59.25, so not too far off of my expectation. I knew that the puts on the downside move were going to get sold really heavily, which I tried to warn everybody about in Pickles Picks. I think some people listened. But they sold the fuck out of the move over the, like the move below the implied move. No worries. What's on DG? Dollar General? I haven't looked at it in a while. Recovery looks pretty nice. I know they're expected to do really well with tariffs. Also, I think they raised their prices, but I'm not sure. I feel like I read something about that. Yeah, they got earnings coming up tomorrow. If consumers are buckling down, they'll probably see increased revenues, maybe a little margin expansion off of the increased pricing. And technically, it looks pretty bullish. I don't know if the current price is the best buy-in opportunity, but it's not terrible. It could be like another entry. Yeah, probably not with earnings tonight. Yes, retested the underside of its trend. There. This is what I'm watching on ES, by the way. See, failed the trend, retested, failed again. That could mean, pull back to like 59.33-ish. And I'm also still interested in that gap to the downside at 10 that we have on SPX. It's a little far out of the money to be very important at this point, but it's still there. My loan officer just told me there's no point in waiting for housing prices to come down because they won't. That's what they always say. And that only the overpriced ones will go down because no crash. Is this true? They're all overpriced. People are asking like 200 grand more for the houses that they bought 2 fucking years ago. Exactly what price will we go down to end of week? And on what day, please? I don't know. We got a lot of data. I think we have Jolts tomorrow, and then we have NFP on Friday, which is a big deal. Don't listen to people who are front loaded on fees. They have a lifestyle to keep going. Yeah. Why would a loan officer ever be honest with you? It's like asking a used car salesman if this car is in good condition. So not to listen to the news. Currently, inventories are becoming bloated and there's no buyers in the market. If rates remain high, housing prices will have to come down. There might be fewer people willing to sell their house at a lower price right now. But there's always going to be people that need to sell their house. And those people can drive down markets. It depends where you live. I mean, if you live somewhere where, the average home price is $500,000, then yeah, it's got a lot of fucking room to come down. If you live somewhere where like the average home price is 275,000, then no, not so much. You're probably not going to see significant losses in home prices there. Enter Florida. Wow, that's a whole other story. That's because you can't insure the homes. They're all a flood risk. Slaps roof. You can fit so many predatory loans in this bad boy. Yep. I mean, have you guys seen like the sellers versus buyers stats that came out like a few days ago? It's just like completely diverged. Buyers are like down here, and then the number of home sellers just keeps increasing. Orange County down 40% year over year. What? No fucking way. Oh, home sales. Yeah, not price. That's the thing is like the right now we're at the part of the cycle where I said people would keep trying to sell their homes for higher prices and then not selling them. So you're going to get a lot of stagnant inventory on the market, which means motivated sellers will undercut. And as more and more sellers undercut, the market drives down because they're slapping that bid. Just wait till the Airbnb supply hits. I've heard they're in trouble. Wait, you mean people losing equity on their homes where they used a HELOC to buy a vacation home are in trouble? Are you telling me the vast majority of Americans double leveraging their single shitty house was a bad idea? What about markets like Reno, where the only homes being built are luxury apartments? Doric, stop trying to smoke the copium. Alright, you're fucked. How hard you're fucked, we'll figure out. Stop acting like Reno has some, like, nationally significant real estate market. Especially the real estate finfluencers. Yeah, those people are the fucking worst. They're just like online real estate agents. Reno's the Tootsie Roll of the real estate market. Reno's very important due to it's important, okay. Reno hasn't been important since they stopped mining silver. Just there's hope to see some of those decent 300, 400K homes drop down to 200, 250K. Again, it depends on how long rates stay elevated, but likely a lot longer. So I'd say there's decent hope to see 400K homes get down to like 325, 300. How much room there is in 300K homes, we'll see. There's always going to be dip buyers. So you're going to get fluctuations. Real estate market generally, I mean, it moves faster nowadays than it used to, but it doesn't move that fast. And it can take like a couple years to see the complete bottom. And then, you can factor in other things, like how much of the interest are you going to pay, over time, how much you're going to pay towards your principal. Because you can bring your loan payments down or reduce your cost to finance significantly by paying down your premium in advance. There's a lot of things you can do to um, kind of pad any potential losses there. But I mean, the problem with buying homes right now is you do face the potential for equity crush, and that's something that's only gonna get worse over the next like 15 to 20 years. Gherkin, this isn't dropping. No, it's just chopping a bunch. It's very annoying. There's a bot puts at 35 and 25, or puts buying back at 25, but there's bot calls at 20 and 15 that are supporting all of this still. And sold puts starting to come in at 20, but all the way up. It still looks like 30, 35 is the top though. I sold some 40 calls earlier for a pretty decent price. What did I get on those? Let me look at my fill. I got $2.01. Might sell some more of them. Also, Jeremy Renner. Is it too soon to make jokes about him getting run over by a snowplow? Probably. Palantir and Hymns are great wheels. Yeah, yeah. High ball. No, I think it was like years ago. He didn't die. He got fucked up though. That's weird that a real estate agent would entertain the idea of falling prices. Remember, when you're buying a house, nobody is acting in your best interest. Ooh, little squeezy boy. Nice. Fire off some of these calls at $4. Your call is in danger. Yeah, it's fine. See? 30 back to $2. Is that the top? Maybe. It depends on if it leads to capitulation or not. Sold put supports down at 25 and 10. Any more news? Yeah. Hmm. I don't know why, but I still really like a 20 close. See? All my short calls are printing. Genius. I can even put a stop on them. I need data in the morning to make this hit 6,000. I don't think so. There's definitely no delta for us to hit 6,000. We have jolts tomorrow. It's probably not going to be great. EU inflation in the morning. Jolts is expected to fall slightly in line with the current trend. I don't think we're going to see a surprise in jolts to the upside. But I would say that's probably the only thing that would get us there. Factory orders are expected to fall pretty sharply. I'm kind of amazed that we're up today at all, with the dollar dropping so hard. The 10-year is still pushing up, with bear steepeners up like 4% today. Spreads back over 50. Alright. Starting to get some of the 35 calls closing, finally. Not too many of the 30s closing yet. But some bot puts coming in at 35. We got what, 30 minutes till close? Upside demand's still a little bit bloated. Selling these 40 calls is the best trade I've made all day. Although I did miss most of the morning. What are the pink and blue lines? Delta flip and gamma flip. What's the assumed point at which dealer exposure to delta and gamma are 0 on the 0DT contract? How are the pink and blue lines? Still very far from spot. And the VWAPs on futures are still way below us too. Like there's not a lot of volume trading on these upside moves. Each leg up has been like one moderate spike in volume, and then it's failed. Yes, it's starting to look a little weak here at 59.40. And Q looks like it's maybe starting to reverse. Needs to lose 21.5, which is probably a fairly important level. Those calls are now under $1. Yeah, I'm definitely going to put a stop on those. We there might be some support around 59.38 ES. 38.25. I guess SPX that's like 28.78. But losing 30 I think is bad. So if we fall much below that, it's gonna get rough. I still like 15 and 20 as closing prices. I don't think that's really changed much. Maybe 25. 23. 23 and change. That'd be cool. Like right there. Somewhere in there. 24.10 to 23.05. Yeah. I'll write that shit down. Ten would be super cool, but I don't think it's gonna happen. We might test it and then bounce, but there's like not a lot of time left. 23 minutes till the end of the day. So it seems unlikely that the downside gap would fill. They're still hanging on for dear life. They're getting pressured a bit, but they're holding on. Vol's picking up a little bit into the end of the day. An event vol should rise into tomorrow because we have ISM PMIs. Or wait, no. We have EU inflation and JOLTS. And the JOLTS is after market open, though. So probably not too much of a push up in volatility into the end of the day. But some on tomorrow's contracts. Nice head and shoulders on ES. I don't really know if the neckline goes below 28, but it's there. I wrote down the price I wrote down. I don't know if it's right, but I think that's where the market should close. Record institutional short and ultra long bonds via feuds. This could end very poorly. Yeah, we were talking about that a few weeks ago. Fucking way too long, the 5-year. Which means dealers are short as fuck. So far, the belly of the curve has been fairly stable, though. Not too much bear steepening. Today's changing that a little bit. With only Powell remarked on monetary policy. Do you ever get hyped for GME again? I don't know. Probably not. Just exhausted with it. And it's like, there's just better shit. I don't really have that much interest in it. I'm not generally one for revisiting plays. Well, I do like selling vol on it, but that's because everybody buys so much of it that it gets overpriced. Those calls are now 50 cents. Alright, this is important. 28. If we break down here, that actually opens up some decent downside range. Because the breakdown here will mean a capitulation of the 30. Bot calls at 30. Yeah, still like 59.20. Still a nice test. It's a little bit lower low. A couple of pennies. But a little bit lower. 21.5 almost tested on NQ. Any update on adding KOS to Gamma Strike? I could check. I don't know if we've added any tickers recently. There was a problem with KOS was that the fucking options chain looked like dog shit. And still does. I don't know if we want to add that. There's a lot of out of the money open interest, but strikes only go out to $8. It's $1 stock. It's definitely not going to be high priority. How's the leap look? That looks a little bit better, actually. Work says he could get it added on Friday. Alright, filled the downside gap on the bounce. MNQ retesting 21.5. So that was a failed bounce on support. ES has pretty far to drop back to 29,750. So the downside support on ES pretty far away. NQ's got a couple more supports though. NQ's got, well, support right here, and then a little bit at like 21,475, and then 21,424. No problem, man. Sorry, we haven't been adding a lot of tickers lately. Trying to do other stuff. Oh, look, my ES contract's back in the money. Nice. Well, yeah, I'm gonna put a stop on those 59.40s. Those are done. that was awesome. I'm glad I sold those. Call selling when things are bullish is always so tense. Bring back color. You look like an obituary. It's a gray day. But that's okay. We can be happy and we can still play. Where do I know that song from? Bars? I feel like it's not mine though. June gloom. Fucking Californians. It's just fog. It lasts all year. Why do they call it June gloom when it goes on the entire fucking year? Because it stays all day. Born and raised in California. Never heard June gloom. Did you live in coastal Southern California? Because they say it all the fucking time, and it's never June. It's literally from fucking February all the way through late September. Is there a past video to show how to read the screen with the put call volume, gex, etc. that's being shared here? How to understand this to help trade? Yeah, we actually have on this YouTube channel. There's like 20 or so Gamma Strike roundtable videos that cover all of that. What in the actual fuck was that on futures? Yeah, there's a playlist for all the roundtable videos. There's about 20 of them, and they go through all of the different like the different tools, and we cover all of like the user FAQs and stuff. There's also documents on the website that discuss all of that stuff pretty in depth as well. Pulte said Powell needs to cut interest rates. That's not real. They're talking about dumping. They're just pumping their fucking Fannie Mac positions. Just more market manipulation and fraud. Nothing special. Plute, yeah. Plute is a government official. The world is nuts. Well, they needed somebody who would be the scapegoat for them gutting federally backed mortgages. And what better idiot than Plute? He's the perfect moron. Dork knows how to shill. Yeah, he does. I don't know how that statement drove any. That's like the fourth time he said that. How the fuck did that drive any volatility at all? What a stupid market. Stupid dumb bitch market. Oh, there we go. 27 test. That's spicy. No, it's still spicy. We only have 5 minutes till close, so it's not as spicy as it would have been 20 minutes ago, but it's still a little spicy. If bulls freak out and capitulate on the 30 here, we could get a little bit more of a dump into close. If 3 minutes left. Hmm. So many sold puts at 25 here. Actually, a bunch of the 30 calls capitulated already. Sold calls coming in at 35.40. Basically synthetic long at the 30 strike. Yeah, if it slipped, it could get spicy. It's a lot of gamma there. Speed. Same thing for the upside, though. Hmm. Interesting. Ding ding. ES 52 test. Is there a gap up there? Hold on 1 second. Some wild volatility here in aftermarket. NFC imbalance, positive ES. NASDAQ. Almost retested 52.75. All right. All right. Closing closer to the top of the market makers expected move with a little bit of news coming in about 15 minutes before close there from about privatization of Freddie Mac and Fannie Mae, which, while very unlikely, seems to have driven some bullishness. This puts ES right at a test of 59.5275, which is kind of an important level. At least it's moderate upside resistance, or acted as resistance back here on the 29th and again on the 28th. Still haven't quite tested that in after hours yet, but very close. Dollar declining throughout most of the day. Seems that the slight bounce in it has failed, pulling back under 98, marking a new low, not seen since around April 22nd. In the meantime, yields at the top end of the curve rising pretty aggressively from their low on Friday. Commodities, big move in silver, gold, copper, oil up about 3.87%. So very large moves in commodities today to the upside, and pretty broad too. A little bit of a turnaround in correlation, but not much actually. Correlation's still a little bit lower than it was last Thursday, and not a ton of leverage in the dispersion trade there. NQ still outperforming a bit, but Dow and Russell fairly well behind ES and NQ. Leverage on the carry trade is pretty flat throughout the day. Forward yield on volatility rose a little bit earlier, but fell back -6% here at close. 3-month correlation came down a little bit. We're still not seeing any significant moves in bond volatility. Almost no change in out-of-the-money put demand. And a slight drop in correlation between cash VIX and VIX futures. I would say, yeah, probably breadth is moderately stable right around this range, but we're not seeing any big changes. Staying between like 46 to 70% of the S&P above its 20-day moving average. Fed fund futures pulled back 1 point of cuts, so now 0.1 priced in for September, probably on the back of JPOW just not saying anything today. Bear steepener moved up a little bit, but the announcement from Plute, the director of FHFA, saw the bear steepener decline a little bit from its intraday highs, which were around 2%. This is a retest, but also a lower high of the upside trend here on ES or SPX on the daily. Still not a lot of strength and still no breakout above 49.47 locally. I will say that the close here above the trend is slightly bullish going into tomorrow. But I'm not sure that's going to hold in the overnight. And then also tomorrow morning we have JOLTS data, which will be pretty important. We also have, what else do we have tomorrow? I think we have EU inflation, JOLTS, Red Book, then we have factory orders, and the TIP Economic Optimism Index, after which there's a few Fed speakers, but no options. So, tariffs on China extended to August 30th. Ooh, fancy. That doesn't seem to be making the market drop, though. Taco time. Yeah, sounds like it. Some Chinese goods. Yeah. Probably not very significant. Anyway, like mostly going into the rest of the week, sold calls to the upside of spot here, between like 59.40 and 6,000, and then sold puts to the downside between spot and like 5,900. So yeah, I mean, fairly neutrally positioned. Almost everyone's on the sell side. And that's probably going to remain true through a lot of the data, but the initial data prints could see some volatility. In the meantime, we're probably going to see IV continue to rise as we move into more important events at the back half of the week. Anyway, thank you guys so much for tuning in. I will see you guys tomorrow morning. Later.